Good afternoon. Welcome back to the channel. This video is not financial advice, not a financial advisor. Do your own research, make your own decisions. All right, guys, welcome back. So I didn't get a lot of sleep last night, so my delivery might not be great in this video. And after this video, I'm probably not going to be responding to anything for the next 24 hours or so. So if you need me, it's just going to have to wait for a day or so. But I am going to get to I am going to cover all the key points because I made sure to document everything in the slides so I don't forget anything. And most of it is going to be in the first two slides. Okay. I would recommend, feel free to ignore everything I'm saying, but I would recommend putting some type of framework in place, objective criteria that you can track on a week to week, month to month basis to kind of gauge the health and direction of your investment. Because if you don't have something like this in place, in times of fear and concern, you might hyper focus on one thing and then dismiss everything else. And that might not give you the most accurate picture of everything. Okay. So these are just indicators I use and I've been using for a long time, but there's more than this. And these are things that I'm tracking and staying up to date with every day, week to week for 3 years. Developer activity, network metrics, like the stuff Fabio covers, does a good job with that too. But with network metrics, that could really be broken down into different, that could be five different indicators itself. Um, Cybercrime trend, and the reason I follow cybercrime trend as an indicator is because ICP as a full stack solution is a solution for cybercrime. And that's relevant because it's a multi-trillion dollar problem. So if I was invested in other layer ones that were not a solution to that multi-trillion dollar cybercrime problem, I wouldn't be following that trend. I wouldn't be using that as an indicator. But it's a huge problem that ICP has a solution for. So I'm going to use that as an indicator. AI trend, problems, opportunity, any institutions adopting ICP, and see, even if I wanted, for whatever reason, to make some type of bear case today, somebody could easily just call me out and say, how can you say that? Because you were suggesting that institutions weren't going to start getting involved with ICP for 2 or 3 years down the road. And it's happening now. I'd have nothing to say because I laid out everything. And so people know where I've been accurate, where I haven't been accurate, where I've had to change certain things. Relative technical comparison versus Web 2, that's also an important thing to look at because if you're investing in some type of technical solution, its positioning in the market is relative to other comparable solutions. So how it compares to Web 2, very relevant thing. How it compares to Web 2 with artificial intelligence, very relevant thing. How it compares, relative comparison to other layer ones in this space, total available use cases and total addressable market. And when I say total available use cases, I mean the use cases that are ready today. And so any given time frame, I'm saying these use cases ready to go now. These use cases maybe next year are going to take more time, right? And just keeping track of that throughout time. Web standards, and just generally the problems ICP can solve for and the magnitude of the problems being solved for. And it's more things than this, but this is what I mean by objective criteria that you can look at to say, are things going in the right direction? Things that you can look at outside of price to gauge whether or not things are going in the right direction. Because even if I were to add price to this, because there's more than 10 different indicators that I'm looking at anyways, um, many more. If I were to add price to it, so now I have one indicator saying things aren't good, and every single other one saying most bullish setup of all time, biggest opportunity ever. But if I ignore all of this and just solely focus on price, yeah, I can understand why people would come to the conclusion that they do. But I would recommend putting something in place like this for yourself. It doesn't have to be the stuff that I have up on the screen. It could be whatever you feel like are the most important metrics for you to keep track of, to gauge the direction and health of your investment and whether or not things are going in the right direction. And even if I were to add price to all my other indicators, there'd be one thing there that's saying no, and everything else was pointing in the right direction. Another thing to think about, do you see blockchain and distributed ledger systems moving forward? If so, why? And also just understanding the extent in your own perception or to what you believe based on your own research, that the technology is already being used by many different institutions all over the world, reportedly in a lot of situations, because we're not there on site to verify certain things. It's case by case. Some examples of institution adopting certain technologies in this space may be a very big deal. Some may not really be a big deal at all. Some might just be bullshit marketing stunts. It's all case by case. So on a percentage basis, what is your confidence level that blockchain and distributed ledger systems continue moving forward until mass adoption? Because if it's like 50% or 20% or 99%, wherever you fall on that, I would honestly assess that. Okay. And be able to actually make a case for it. Don't always be like looking at somebody else to make the case for you. There's access, we're in a incredible time in this context. Like you have access to so much information. And, a lot of these different AI bots are, you don't even have to pay for them. Some of them you don't. And there's just so much information out there for education, learning. And I just can't overstate, like, just being on crypto Twitter all day is probably not a good thing in this type of an environment. And time would be better spent elsewhere doing research, just unplugging from all of this and just going to the gym or going outside or just going and doing something that's not involved with this. Yeah. What would you need to see specifically to change your outlook? Like very specifically, just price? Is price enough for you to just dismiss all of this? Did you have certain expectations that like it needs to go up by XYZ date? And see, that's why I try to just over reiterate. It'll happen when it happens. And there's going to be a lot of shakeouts. And I believe that there's going to be a lot of shakeouts. And I've always believed that because I genuinely believe what I say about the size of the opportunity. So if I believe what I'm saying about the size of this opportunity, then I should also believe that it's not going to be an easy route. Indicators. I have tons of indicators, tons, way more than this that I'm tracking all the time, everywhere. It's like, that's it. That's all I'm doing. But price is not one of my main indicators right now, given the stage that we're in, given the implications of potentially migrating to a new web, and given how the market is structured with a 100-to-1 leverage trading market that impacts the spot price 1-to-1, which is the most ridiculous thing to put into a market I've ever seen. I don't even know if I've ever even seen anything like this. A 100-to-1 leverage trading market that actually impacts spot 1-to-1. But again, even if I were, because I don't want to make this video about price, I don't want to make this conversation about price, but even if I were to add price to my evaluation, that would just be one thing that's saying no when everything else is pointing in the right direction. And so that's when I start to analyze how the market's structured a little bit more critically. I start doing more research because there's this one thing that's sticking out and everything else is pointing in the right direction. Everything else is corroborating what I'm looking at, except for this one data point. And so I need to better understand all the moving parts to that number that I see on my screen every day. And if you really start digging into that, you'll find some very interesting things. But everybody that's in the ecosystem is in different positions, right? Some people might have over allocated and allocated more than what their conviction really supports. And in times like this, that does show up. And people are in different roles, speaking from different perspectives and points of view, different levels of experience, conviction, everything. And I don't even want to get into that right now. But I would recommend having some type of a thesis, some type of an outlook framework that accounts for the numerous extremely important variables that any serious guys, do you think honestly some investment firm, any type of serious investor, any type of serious institution is going to dismiss all of these different things, all of them, and solely look at price, knowing there's a 100-to-1 leverage trading market that impacts spot 1-to-1, and also knowing that for the most part, the market moves the majority of the market kind of just moves as one, right? It's not like it's just ICP over the last year or so. The majority of the market moves as one, which further undercuts trying to isolate price with ICP specifically to dismiss all of this. Yeah, I would have some type of framework in place, some objective criteria that you can look at, engage to see whether or not things are going in the right direction. Okay? Pause. That's really the most important part of the video. I'm going to go into this, but that's really the most important part of the video. So if you want to stop watching right now, it's perfectly fine. And I'm not responding to anything about price solely. I'm going to give you my thoughts on this. And if all you have to do, like if you don't have a legitimate rebuttal to all these other things, if you can't present some type of coherent argument and position and thesis that includes all of these other things, and all you're going to do is comment about price with this, get the fuck out of my comments. Okay? You're wasting my time. Now, here's the issue I have with a lot of different things with the ICP space specifically. And I was saying the same things when we were at 283 and the death spiral FUD was circulating, right? Everybody told me, and I'm not saying I don't believe this, everybody told me that this move right here happened on FTX because Sam Bankman-Fried, right? FTX, Sam Bankman-Fried, and he caused this to happen, right? Now, I'm not saying I don't believe that. I'm just showing how illogical it is to wholeheartedly stand by that position, given there was no spot ICP on that exchange. So an exchange that has no spot ICP, the thing that you probably have in a neuron, right? None of the actual asset, but solely through derivatives contracts, you can create a move like this. So some of you wholeheartedly believe this. And again, I'm not saying I'm not saying that I don't believe that's what happened. I'm just showing how illogical the argument is. People are going to say months ago that this move happened with zero spot ICP solely through derivatives contracts. So if you say that and you believe that, then you also have to believe that what is making that possible? Is it some magical thing that FTX or SBF has? No, it's the way the market is structured. It's the way that the derivatives market and that the leverage trading market interacts with the spot market, and all of these moving parts together give you the price that you see on your screen. But there was no special tool or anything like that that SBF or FTX had to do this. They used the system in place, the leverage trading market that's just been standardized across this entire space, the 100-to-1 leverage trading market that's been standardized across the entire space. So if this type of stuff, if this move can happen with no spot ICP solely because there's a derivatives market that impacts the spot price, there's a leverage trading market that impacts the spot price 100-to-1, but impacts the spot price 1-to-1. If that's possible with no spot ICP, and then months later, the same derivatives market is still intact, FTX and SBF is in jail, but the same derivatives market is right there tied to the spot price, And people are acting like the spot price is 100% legitimate. It's a reflection of buying and selling, of spot buying and selling, and there's no price manipulation going on. Why would you believe that? Do you just think that Sam Bankman-Fried was the only person that's going to use the derivatives market to manipulate prices, to manage the market? You know, it's a ridiculous argument. It really is, in my opinion, especially considering there have been it's been 3 years of overwhelmingly more longs being liquidated than shorts over long stretches of time. The ratio here is so skewed. And you generally need to understand that when longs, over leveraged longs are liquidated, it adds to selling pressure. When over leveraged shorts are liquidated, it adds to buying pressure. So you need to generally understand different parts of their derivatives market, how it interacts with the spot price. But a 20-to-1 long position, let's say you have $1,000 in collateral, and you're going to go on a 20-to-1 long position. Your position size is 20K, but the only thing you put up was that $1,000 in collateral or that $1,000 in Bitcoin or ICP or whatever it is. So you have a 5% margin for error because that's how much collateral you have put up. So when price drops 5%, you're getting liquidated. Okay? But the very, 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 very important part here is that when you get liquidated on that 20-to-1 long position, that's not $1,000 in sell pressure. That's 20,000 in sell pressure, even though 19K is vapor, is hot air. It doesn't exist. It wasn't backed by anything. It wasn't collateralized. All right. But that's adding 20K sell pressure onto the spot price. And so when you have a mechanism like this in place, I'm not saying that there's 100%. I have proof that exchanges and market makers are manipulating the price. They're not, they're the ones that put out the data. So if they are doing it, they're probably not going to put out enough data for you to be able to prove that just on publicly available data. And so this is kind of gets into the, people setting this insane burden of proof in certain situations, but not other situations, right? When you have something like this set up, if there's not price manipulation happening, it's because market makers and exchanges, out of their good conscience, just decided they weren't going to manage the market. They weren't going to manipulate prices. There's nothing stopping them from doing that. That's a fact. And for those of you that have been promoting the whole FTX thing, again, I'm not saying I don't think it happened, but for those of you that have been like pushing that forward, you have no argument here against me. Nothing. Because it wasn't anything special about FTX or SBI. It was the derivatives leverage trading market. It was that tool, that vehicle that's built into the market. If that wasn't there, he can't do this. He can't do it the way that he did with no spot ICP. He was able to do that because of the derivatives market, not because of anything special with him or his exchange. Now, for 3 years, there's been overwhelmingly more longs being liquidated than shorts for ICP. The ratio, long liquidation, all of these green candles adds to sell pressure. When you hear $1 million in longs have been liquidated, and then you see that, that waterfall crash, it's not really 1 million in ICP. It's a small percentage of that. Maybe 2, 3, 4, 5, 6% is actually collateralized. The rest of it's just hot air. But it counts 1-to-1, regardless of how much it's collateralized by. Even if it's only collateralized at 1%, if it's 100-to-1 long, you put in $1,000 collateral, your position is 100K, you're long, you get liquidated. That's not 1,000 in sell pressure. That's 100K in sell pressure. And so if this is not now look at the difference between the ratio of long liquidations and short liquidations with ICP and with Bitcoin. Bitcoin closer to 1-to-1, probably still more longs, but closer to 1-to-1, right? And then look at the trend for Bitcoin. This is a 6-month trend, right? Look at the price action for Bitcoin, and you look at ICP, probably 5-to-1 6 to 1 more longs being liquidated than shorts. Positioning never changes. Really? For 3 years? For 3 years, traders haven't decided, hey guys, maybe we shouldn't be going long on leverage because we're 5 to 10 times more likely per the data to be liquidated going long with this asset than we would be going short. No positioning changes. So all I'm saying is this could be 100% organic, and this could all just be happening organically. But the vehicle and the mechanism is in place for them to manipulate the prices and manage the market. And so if they're not doing it, it's solely out of their good conscience. Okay. Over leveraged longs being liquidated adds to sell pressure. Over leveraged shorts being liquidated adds to buying pressure. Both of these metrics are tracked and open to the public. The ratio of long to short liquidations will be different asset to asset. If you really want to do an interesting experiment, focus on the ratio and go asset by asset over a 6-month trend, and then also look at the correlation between price and that ratio in comparison to other assets that have different ratios. It's unclear to me. So if any of you definitively know the answer to this and you have something to verify what you're saying, if it's trust me, bro, get the fuck out of my comments. It is unclear whether the act of opening a leverage long or short adds immediate sell or buy pressure to the spot asset directly, like the liquidations do. I tried reaching out about this. Nobody's gotten back with me. It's kind of hard to get a lot of information out of these leverage trading exchanges. But if anybody knows definitively, and you can point me to some verifiable source with this, not indirect action. I get that certain longs and shorts being opened could affect positioning in other ways, in other parts of the market. I get that. That's not direct like it is with liquidations. When you see these huge pumps to the upside, when you see these huge pumps to the upside or these huge waterfall crashes, and you see X amount of shorts being liquidated and X amount of longs being, you always see that. You always see the liquidations. You never see, oh, price just shot up to the moon because somebody opened this big long position, right? Now, longs and shorts being open, that is going to increase a metric for sure, which is open interest. But whether or not it directly, as soon as that position is open, has an impact on the spot price, I don't know the answer to that. But let's just say that it does. Okay, let's just say that it does. Because this wouldn't change my opinion at all. Let's just get the data. We would just need all that data too, like we have this data. So we could add that data in with this data to get a better picture of everything that's going on that gives us that final number. Because if people are going to make that number their entire assessment and use that number to dismiss all of this, you better have a very good handle on how the market works. Yeah. If not, you're just, I would argue, making a ridiculous argument. But if the act of opening a long or a short has a direct impact on the spot price, we would also need to factor in that data into the equation for a more complete picture. All right? So we need to be able to factor that data into this. But what I can say is that, as a matter of fact, long liquidations is direct sell pressure. Short liquidations is direct buy pressure. And for 3 years, this ratio with ICP has been so distorted and skewed towards longs. And I'm showing you Bitcoin versus ICP right now. ICP is probably 5 to 6 to 1. Bitcoin's not that, okay? A lot closer to even. And people just keep going long. These people haven't run out of money yet. I know some of this is organic because I see people open long positions on my feed. So I know I'm not saying all this is manipulated. What I'm saying is the machine. This is the machine that could be used to manipulate the price. And if I have to have so much definitive proof to actually take to the police, where am I going to get that from? The very leverage exchanges themselves, they're going to give me all that data. There's not enough data that's published to even be able to definitively prove it. You can just kind of get a picture. Why don't all the pro traders ever mention this metric? Seems relevant to me, right? If you are 5 to 10 times more likely to be liquidated going long than short, then it would make sense to me that the pro traders who are talking about going, you have two options, going long or short, right? There's only, and if that's the ratio with any given asset, don't you think that'd be a relevant metric to tell people? Don't you think that'd be a relevant metric to assess before you opened a position? But nobody talks about that, right? The most important things don't get talked about. The elephants in the room don't get talked about. The big answers to things, they don't get talked about, whether intentionally or unintentionally. The machine is in place to manage the market. I'm not saying I have definitive proof that's exactly what's happening because I'm not going to get access to enough data. If it's not happening though, it is because the market makers and exchanges are deciding not to. The way many people believe SBF decided to, then that there's no more market management happening because everybody just decided that they were going to do the right thing. All these market makers and derivatives exchanges that promote the casino of leverage trading, they have decided that they just want to do the right thing for retail. And they care about price discovery with each of these assets. So they're not going to do any manipulation, they're not going to do any market management, even though they have the tools in place to do it very easily with no recourse. Because they are stand-up people who care about price discovery. And then you get into stuff like this that just happened a couple months ago. You know what I mean? And I have a couple of things that I was going to go over, but that's going to be it because there's other things I'm going to have to address in a different video. It's more like ecosystem stuff. And since I'm on not a whole lot of sleep, I'm kind of in rare form right now. I don't want to go into that and go really hard on something or people, and I'll just cover that in a different video. Guys, that's really all I have for this video. I know my delivery was kind of weird, but it's because my brain's kind of fried and I'm not firing on all cylinders. Okay. I'm not going to be responding to anything for the next 24 hours. What I would recommend is unplugging from crypto Twitter and taking both of these two slides right here and like going through all of this yourself. And from here on out, putting a system in place, something that works for you. It does not have to be this is the most reasonable position imaginable, guys. If you're gonna, make an assessment, use as many different important variables, criteria, metrics as possible. Don't use one to dismiss 50, 60, 100. To dismiss things like entire countries adopting the technology for smart city infrastructure. And very large corporations that are already in the smart city space building a VRC platform that's hopefully and ideally for them going to be the global standard for voluntary recycling credits. And this was an initiative that was backed by the UN. So based on my indicators, my criteria, most bullish setup of all time. If you see a different outlook, I would argue you're probably narrowly focusing in on one or two different things and you're losing perspective. That's all I got for this video. Not financial advice. Take care. Have a good day. I'll see you in the next video.